Morning, everybody. Hope you guys are doing well. Today we're looking at NASDAQ. I posted the daily, at least my daily buys for now, into that daily buys chart as usual. I'm expecting this right now briefly. There's first presentation gap to be used as inversion. At least that's what I'm favoring. I really do not want it to come out and take out this 939 low as long as we can stay within the upper portion. But the fact that we're not leaving this right now is of some concern to me. I know we have a key time coming up, so I'm not worried that it's consolidating, but I'd like for it to displace. And as soon as it can take out this high with displacement from an efficiency on top of that, that to me would confirm the fact that we're going to go for the PM session high, which to me is my current target for the day, saying that we just came from external range on the sell side, going back into internal range premium. You have this range in here, this inefficiency that was left from yesterday that I'm expecting us to draw into. Now, the entire week has been quite difficult in terms of a weekly perspective. We've had this drop down, taking out the sell side, displacement up, taking on the buy side. Another run up here on Wednesday, failing to run those out with no SMT. Dropping down again, taking out those lows, and then Thursday taking out these lows. So it is a consolidation reversal profile, which typically what you see is that 8:30 will form the, not 8:30, but Thursday will form the lower high of the week in this case. Now, also when we're looking at the 4-hour chart, I don't really see any clear displacement to the downside of expecting continuation further into this gap. We've already had a kind of a 3 drives pattern, if you will, into this inefficiency. And I think that in terms of overall structure on the higher time frames, like the week and the months and things like that, we are still assumed to go to the all-time highs, given the seasonal tendencies and things like that. So it's very hard for me to argue a continued sell side move, especially with the 15-minute run up we got going into the session. This kind of dropped down, 8:30 forms a low, and then it just starts to displace through an inefficiency, and obviously dropping back into it. And we don't have any clear market structure shift or SysD or anything like that, but the fact that it's displacing through that and all the other kind of things that I listed before make it very hard for me at least to have a very good argumentation for bearish price action today. So that's why I was looking for longs. 9:30 nicely dropped into the last manipulation leg into -2, -2.5 with a key PD array, 15-minute chart in here. So we're waiting for some sort of at least a 5-minute displacement leg. We've got this volume imbalance here forming on the 5-minute as well. And this is the macro time right here, tagging into that 5-minute imbalance, as well as the first presentation gap. And now we're expecting displacement up. So that 1 hour, sorry, if I go to the 15-minute chart, you'll see it. This PM session high is creating the 1 hour gap. In a sense, it's the first liquidity pool inside of that 1 hour gap. Now, if we wanted to mark out premium and discount on this leg, then we could still be looking for around that area right there, which is slightly below that midweek opening gap and that PM session high, which obviously equilibrium itself isn't normally just a draw. It's equilibrium plus PD arrays. So that and up there are my current draws for today. That's sort of what I'm looking for. All right. I'm currently in a long position from demo and on my other screen as well. We'll review that at the end. But using the same framework I just told you with the bias, with the 9:30 being used here on a 8:30 news day, offering the entry low sessions as it starts to expand up and drop back into the consequent encroachment of the first presentation gap. That's where I'm going to go on long and ride it up. So actually, if I turn on my, if you care to see, this is that trade there, which I can actually move it to right here now. The framework I gave you. Basically, we can put Asian high right there, actually. This is at the PM session high. And then this up here, excuse me, is at the -2, -2.5 of that dealing range, right above the gap. All right. So we're looking for that. And obviously, with the macro time here as well, we've got this low, high, lower, low, and inefficiency being placed on top of that. I'm going to turn this off for now. Is it best to wait after home sales? No, the orange folder at 10, I'm not too worried about that. On Monday, 9:30 was the most retail buy orders ever. Could have DNI, I don't think I understand your question. I mean, yeah, there's a lot of buy orders on Monday. But I don't think obviously that alone is going to be the reason as to why we drop down into this. I think it's just a consolidation reversal profile, and we're going to this kind of weird PA up until then. So with consolidation reversal, you look for kind of like this, where this is Thursday, this is Friday. And you look for a continuation from Thursday into Friday. And you can see at this part, this is the low being formed. That's why I said I'd favor if that's being the low of the session, and low of the week is down there. It's the low of the week, and we're going to continue to expand up a great deal coming into AM, rest of the AM session and things like that. So inefficiency there, bullish order block in here, the 5-minute chart as well. See the wick. So you can drop down and even just touch this or touch this. Those are both be valid order block opportunities. I'd favor I drop a little bit further into it, maybe like consequent encroachment, even further down as the macro, and then we continue back up. What we do over here? I didn't even see that. We do this low, high, lower, low, ran out liquidity. You got this lining up with that. I still think the stop would have to go below the entire inefficiency, not CE. In demo. If it shoots to -1 before 10 a.m., kind of looks sus for a reversal before continuation. Yeah, definitely. I think if we do tag this coming to 10 a.m. and the PM session high, we'll definitely get a retracement back inside the range as we're digging into that 1 hour gap. But if we, I mean, based on what the profile is telling us for the weekly perspective, I'd be completely fine if we never get that, if we just displace all the way through that new week opening gap again. Now, we do have that large inefficiency here to be traded through. So I'm not going to discount that. But I mean, to be completely honest, it's just, for the most part, it's actually pretty efficient in its range. There you go, dropping down, back into the gap, taking out the short-term low. 15-second chart, you look for displacement and assist D. If we leave it, yeah, I would like it as one. Gap. It's touching into it right there with the VI. Taking out the short-term high there. Come back to the 1-minute chart. So there's your macro setup. Displacing up towards the Asian high, wherever that was right here. And then PM session high. Asian high to me is not, you don't look at this as a draw on liquidity. You can use it as a low hanging, but the PM session high is a little bit more juicier. So you rely on this. Like in terms of those session liquidity pools that I'm targeting, PM session high and London session are going to be the main ones. And obviously the previous day high, previous day low, which are normally paired with the AM or PM. That's going to be the main ones that I look for. Asian session is great in some scenarios, but when we're looking at this is the daily low, we don't expect it to just open, drop back, form the daily low, and then come back to the open and tag the open and then sell off, right? That's not going to form the candle, right? We don't use midnight opening price as a draw on liquidity on expansion days because it's going to go past it, open, low, high, close. So it's not going to just tag the open. And I look at the Asian and being very close proximity most times with where the open is. In this case, I guess it's not. You have some wrong there. You have midnight open price down here. So Asian probably, or that's not even Asian. I'm just tripping. That's 50% of the range. I'm just either way. My spiel there is still valid. So when you're looking for it to expand in any sort of scenario, you're not going to use the opening price as a target most times, unless we're in a consolidation day. So Asian is normally in very close proximity to that midnight opening price. So you're not going to be using that as a draw on liquidity most times, unless it's very available or it's a low probability day that's going to have very minimal expansion. Then you use Asian. That's perfectly fine. It's a time-based liquidity pool, meets the requirements. But for most days where we're expanding, that's not going to be a. Yeah, I was like, I saw midnight opening price down here, and I was like, oh, I guess it's the same color. That's why I got tripped up. But 5-minute overflow at this point is in line. Don't really need that chart anymore. Order filled. Oops. How did I just get filled out? Oh, on the. I see. Actually, let me put that back on and we can trim it to break even. Yeah, that's fine. Oh yeah, for 100%. Questions can always be asked. Any stream, anywhere. That's what I'm here for. What's up? Sorry, I'm DMing someone right now. Give me 1 sec. All right, let me look back. Sorry. So nice expansion up. Obviously, we're going to tag into new week opening gap here and the PM session high. I'm going to keep my stop here. I want to leave it run for the rest of the day. So maybe this might be too close. We'll see how quick we're going into new week opening gap. If we start expanding to new week opening gap, I'm going to move it based on a time basis. We're going to get there too quick for me. So that's normally, by the way, whenever I preach not to be moving, take profits. And I think it's important in the beginning not to do that, right? Because the problem is that's a direct reflection of greed, as we can't accept. Whenever we're placed in a market environment, we tend to only have a confirmation bias of what we believe to be true. So if we believe that price is going to go up, we disregard any information sometimes that it's going to go down. When price is going down, maybe against us, we disregard any information that it's going to keep going down. The information that we don't want, we disregard. So when we're moving or take profit, that typically is a good indication of greed being placed in when it's not based on anything logical. Same thing with the stop loss. You're not going to take your stop loss and then drag it wider and then drag it wider and drag it wider until you can never get stopped out or until your account's blown. The only time that I will quote unquote move my take profit or move where my partials are being hit or something like that is when I'm looking at it from a time perspective. If we start to expand and it's too close, meaning we're going to hit that draw on liquidity too early in what I expect to be that entire range, I'm going to move my take profit. or I'm going to move my limit orders to, I'm still going to get filled out on where I think it should be going. But for runners and potentially the majority of that entire expansion, I will be moving it based on where I think it's going to go on a time basis, right? So in this case, you can maybe drag this even further up. I can move this to 1 limit order. Put 1 on consequent encroachment there. Oops. How do we trade on days where price doesn't dig deep into discount? How can we handle that scenario rather than waiting for the trade to discount? Okay. So you're talking about specifically expansion days. Expansion days, you have. Well, let's look at this. Let's look at the fact that when you have a breaker setup, okay. When you have a breaker setup, let's take this over here. When you have a breaker setup, it's not going to retrace into discount, right? And that's the main way we can trade these kind of failure swings, if you will. When it's retracing, then we do look for it to be in discount. So those are 2 different stages of price delivery, right? We have expansion, we have reversal, we have retracement, and we have consolidation. Now, I've given in the PDF, the New York PDF that I posted, back in December, and a bunch of people have, there's entry models for each of these. There's very specific PD rays you look for each of these. So when we look at retracing and it dropping into discount, that's only going to happen when we're in the retracement stage of delivery. So if you have different models for expansion and reversal, is very beneficial. Now, that being said, what does, other than the breaker setup, how then do we trade these kind of expansion days where it doesn't dig into discount? We look for order blocks. We look for SMTs at the lows for things on those slight retracements, like in here, or on any little sort of retracement, you'll have SMT at the bottom, SMT at the top, and then preferably an order block it's trading into. So if it's not respecting that gap, when it is respecting that gap and it's just not going further into it that you expect, you look for an order block that's paired with it. Now, when we look at last week's CPI, it just shot up and it was just filling gaps very shallowly, no order blocks or anything. That's simply just a no trade, for me at least. When I'm looking for either a retracement opportunity or a retracement with the gaps or reversal opportunity, if I'm not seeing those kind of criteria, then there is simply no trade. And now, obviously, on every single sort of leg up or leg down, in order for that move to be started, there's got to be some sort of run on stops. So you'll always almost have that turtle soup and assistee after it as an entry opportunity. So the way that we trust that is obviously we read order flow, we read bias. So if bias is further up and order flow is pointing to that, okay, we don't expect deep discount retracements or even any retracement at all. Instead, it's just going to be expanding, as well as time of day, as well as just relying then on order blocks to be used as those support structures as we're trading up. You can also be looking at the fact that normally when we have those large expansion days, to the left over here, you're going to have very high resistance liquidity pools, right? Almost looking like this. And sometimes even just consolidation at the top or consolidation, things like that. When you see that, you expect speed, right? It goes from slow to fast. Generated liquidity to sweeping liquidity. So when you see that signature as well, paired with all the things I said before, that normally is going to be a very good, useful kind of draw and useful analysis to expecting large expansion days. Okay. So partials there ran out. I'm going to keep my stop in here, like I said, and I just want to see how it's printing relative to this gap. I think we still have plenty of time on the day. And you can see here, the home sales coming in, basically doing nothing, right? Tie wags. So when you see that orange folder, you normally don't need to skip or anything like that. Never like taking partials, but since I started to take partials at least 2R, I feel less emotion, slowly starting to get rid of greed. Yep. It's great. It's pay the trader, removes the risk, and rewards you for being right in a sense. I don't want to try and always go for 7R or 6R or whatever it may be if the trade is offering me less than that and I'm taking that. Like this trade itself right now. It was already at 3.68. So I would prefer to take something off on that. I wasn't sure if home sales is one of the orange folded. No, it's I wrote it down, but that was like 2 years ago. I feel like I have it somewhere. There's one of them. I know what you're talking about. It's like PCE something. I don't remember though. Don't take my word for it. So like I said, I'm more concerned now with my limit orders being filled. So how far is it going to go? How much is it going to give me? Rather than, I don't have to worry about my stop loss. If I jam my stop to here, the management part of the trade is going to become very difficult. I'm choking the trade out. It's not going to have any time to retrace, any time to move back into the range. I'm going to be choking the trade out where it's not going to actually give me any movement. I'm expecting every candle to be green. It's not going to happen. So when I'm taking partials like this, I'm not trying to secure profits or anything quickly. Keep it still in a place of invalidation. I don't think it should come all the way back down into here and tag this and then come all the way back up. I'm in favor if it continued. And I really don't think it's going to take this low out either. I'm allowing it to come back and fill this gap or sweep that low if it wants to. But my stop right now is underneath the 5-minute order block. So I think that's a very reasonable point of invalidation for me. As we continue to look for higher and higher prices, we're just watching to see what limit orders are going to be filled and what it's offering in terms of time and price. Yeah, any of those 9:45 news, you don't worry about it. Any of those orange folder 10 a.m. news, you really don't worry about. Even unemployment claims. I mentioned it yesterday on the stream. If you heard me say, unemployment claims is one of those ones that really just aren't super important. So the day before it technically is not that bad, as we saw yesterday, with the time 50 macros set up and things like that. It's normally not a terrible day, and here's your evidence of it. Unemployment claims, we're not really doing a whole much. Sure, you still have 8:30 news signatures in here, but in terms of, is it going to mess up the day before? Normally, you don't see that. Not saying it's an all the time thing. You never really have an all the time thing, but that's the rule. Everything is flexible. Everything has distinctions to it. There's never one distinction that the market can make. So at this point, look how we've started the engine at 8:30. We've displaced up till 9:30, displaced up again till 10 o'clock. My expectation now for Silver Bullet is that we should consolidate for about 30 minutes and then continue the move up. So do not be surprised if we get retracements. Do not be surprised if we get any sort of, the deep retracement. I wouldn't really like it too much. I'd favor this kind of retracement more. If it drops into this gap and the order block there, that's better. I was wondering how you can identify a reversal at -1 or just retracement for higher. I don't really have any rules for that. It's more of, when you see that -1, it's more of a larger swing point. Right, like if we're looking at -1, it'd be more of like this swing is -1, or like this swing as a -1, something like that. But it would be more price signature than anything. So SMT, key PD array, everything else you normally look for. Nothing different. I didn't enter my full position when I took partials way too early. Lost my confidence early in the week. Shouldn't have traded. My winners don't always cover my losses. Didn't enter my full position. Oh, I see. Yeah, it's I think if you got to have a very rigid and trusting risk management system. So whatever that is for you, make sure you're 100% following it. I have if you want, if you can download Python onto your computer, it is a code reading software. I just made my own Python script to calculate contract sizes. Anyone is free to download this and use it if you want to. Let me see if I can find it in my downloads right here. You just punch in basically the risk you want to use. You punch in the stop loss distance, and you punch in what instrument you're trading, and it'll give you exactly how many contracts you can use with the distance of that stop. So if you have a very rigid risk management profile, that way you're not making those slight mistakes, right? But as well as knowing what your average RR is. So this is the importance of backtesting, the importance of collecting data after the fact. You can see really how far did the trades go, right? If you're taking it off at 2R and every single time you get in a trade, it's actually offering you 4R, that's something to maybe improve on. Same thing with the 3R. So you should really not be taking any trades less than 2R, I personally think. I think 2R is a good target for most people. It's a very achievable goal. So 2R is kind of the minimum, I think. Now, if you have a 1.8, 1.7 or whatever, and it's only giving you that on that day, I'm not then saying push it up to 2R, push it up past that just based on the R. But if you're taking on average 2R plus trades, I think mentally that just gives you a framework that, okay, I can take a loss. I can maybe take a couple losses in a row. If I'm constantly dropping my risk, every single time I take a win, it's 2 times what my loss would be. And as long as you have a 40% win rate, that's profitable. Remember, a 2R with a 40% win rate is profitable. That's, that's the perspective we're trying to trade with, right? A 7R, a 5R. What is that one graph I shared? Let me see if I can find it. But sometimes we overestimate what we need to be doing in order to be profitable. It's not 90% win rate with a 4R, right? If you can get that, that's great. But sometimes you just lower expectations and lower what we think, especially in the beginning of what we're capable of doing. Very easy. So look, if you have the R multiple of 2, you have a required win rate of 33%, 2.5 is 29%, 3R is 25%, and as you continue down, you can even on that consecutive loss board there, if you have, let's say, a 40% win rate and a 2R, right? Or even a 40% win rate, you can see that chart right there. I think if everyone downloads that and you just study it and you trust it, it's very beneficial, right? So say you have on average a 60% win rate, the chance of you taking 4 losses in a row is 2.6%. So you have a 2.6% chance of taking 4 losses in a row. It's not impossible, but the variance of the trade makes it very, very low, right? And if you have a 70% win rate, the chance of you taking 4 losses in a row is 0.8%. So your risk management has to accommodate for the wide range of variance in the market and in your entries and executions. But also if you have numbers that you can trust and can back, and okay. And don't make 2R, simply don't make 2R your goal. I think if you're shooting, sure, 2R is a minimum, but I think what I think is capable is, I think at the end of my trading career, I'm going to shoot for 10R trades or 5R trades. Doesn't mean that every single trade, your trade is going to be 10R, or it doesn't mean you're not going to take partials. But if you place limitations on yourself and in your trading, you will subsequently block out information that's telling you otherwise, even if it's beneficial information. If your information is telling you, yeah, every single trade you take is a 4R or a 5R, but you're only shooting for 2, you're going to only be stuck within that realm of perception of, okay, I can only trade 2R. Those days I'm going to just kind of block out, or maybe it does happen and then it generates more fear of execution, things like that. So 2R should be the goal, shooting for maybe more as you progress. And make sure it's data backed. So don't just push from 2R to 3R on a random day just because you feel like it. Have the data to be there to support the fact that it's going to go further. And to recap, of course, you're not trading RR specifically. I'm not ever trading 2R, using the RR tool as a target or anything like that. Whatever the targets are in price, or the targets are in price. If it gives me 2, 3, 4, 5, 17, doesn't matter. It gives me 1.7, it doesn't matter. I mean, it kind of does. I won't take that trade most times, but that's the way you should look at it. And I think it's that way. If you do take a win, you take 2 losses in a row, you take 3 losses in a row, you've got the risk management to allow it. You trust that risk management, and you've got the perspective of, okay, if I take one trade tomorrow, if it shows up, I can wipe out my entire loss from yesterday or even the entire week if you do it properly. My perspective is if I take a loss on Monday, Tuesday, Wednesday, Thursday, and take a win on Friday, that win on Friday has the possibility of pushing my entire week green. That's the kind of perspective that I want. So I'm shooting for higher R's and better executions as I've progressed in my journey, try and get better and better trades. Where my average R multiple has gone up from 1 to 1, and actually negative R at one point. If it was negative R, I would have traded it. If you look back at my 2021 and 2022 content, I was just traded the macro. My entire thing was I'm going to trade the first inefficiency in macro time that's printing towards my gap. I don't care if it's in premium. I don't care what's going on. Placing my stop there, my entry there, stop at 20 points away. Might take profit at 20 points or 40 points. I wasn't even using PD arrays sometimes. And it worked. It worked for me. But then as I progressed, obviously there's more information to know and more to get beneficial at. But everyone has humble beginnings. So you start small, you work your way up, and eventually, like, if I told myself 3 years ago, yeah, you're going to be able to take low of session to high of session trades, or even this trade here to me is mind-boggling, at least from a 2021 trader's perspective, I think. So I'm very happy with my progression as a trader, and it's nothing but just showing up every day that's put me in these kind of trades and the progression and the wisdom, I guess, that I've been blessed with. You just continue to show up, do the thing you need to be doing, refine, learn, constantly be in a state of learning, not of new PD arrays, but of yourself and of the model. And you just will constantly progress because it's an ever-changing thing. So you're just learning more and more and more distinctions of what's possible. All right. So here's your trace kind of I look at this as kind of consolidation back inside the range. Notice as well, we don't have, at least for now, there's no displacement back inside. So as it's dropping back into the range, and it may come back and fill this gap. Notice how there's no sibis being formed within this range. Okay, we've got gaps on the way up, no gaps on the way down, and it's generating this kind of liquidity in here. So to me, I like this little retrace back into discount. Like I said, if it happens to come all the way back into this range here, then that may be tough. I may get stopped out there. And it continues back up. It is what it is. So we'll see how this order block holds this gap, etc. What is that green light signifying? The green light? Oh, the light green. Oh, this is new week opening gap. Yeah, this is new week opening gap. I normally don't use it on my charts. You normally don't see it in my recordings and videos. But the fact that we've been hovering around it the entire time, notice how right over here, right? We've been staying. I'm going to use it as not a drawn liquidity all the time, but just as a reference point. This is the weekly open. You look at that as a weekly open. So as we're hovering around it, that same signature, if you see this same signature on a lower time frame, say this is 9:30 and you see this, that's evidence of very difficult and delayed movement. Thanks, just answered 3 of my questions in that small ICT rant. I appreciate it. That's good. That's good. I like that. 5 minute there. We've got 15. Yeah, we got a bullish order block. Got the wick of it there. But looks like it's going to come stop me out. This would be your OSAC entry? Yeah, preferably it would be. That's what I'm looking at. This is the weekly low. This is an OSAC entry. That's why I'm trying to see how much I can get out of it. If I can squeeze the whole daily range out of it, I'm trying to, but if it just gives me this little run up here and I get stopped out, then we'll be done for the day and maybe for the week. And here comes. You just stop loss? Maybe, no. Just you baiting me? Great. Thanks. Thanks. JKX is cooking. I love that. That's a beautiful weekly P&L screen. No trade, green, no trade, green. That's my kind of P&L screen right there. 1 to 2 days a week is all you need. It's so nice. It's so nice. Isn't it the best feeling, right? Just like waking up and you're like, yeah, this is not good enough. Go back to sleep. Or just leave it for the day. And you come back, tear it up the days you want. It's so freeing, I think. It's like so freeing. This man cooking too. I love it. 285, 5R. W community, man. Fantastic community. And if you're not at that point yet, you will be soon. So don't worry. Don't use this FOMO. Don't feel like you're missing out. Don't feel like you're behind schedule. None of that, right? Everyone in the journey has been at your point. If you feel like you're behind, if you feel like you're catching up, it's never that. All right. Every single person has felt that same exact thing. You just stick with it. Here's my stop out. Right. Bro. Thanks. Thank you. There's a stop. Put it up into stream trades for you. Just gonna go back and review. And take that off of the screen. And we can just learn. But yeah, it's if you feel like you're behind, if you feel like you're struggling, if you feel all that's normal. Now, one thing to note is trading is not how much pain you can take and keep going. It's not what it is, okay? It's how little pain you can take and feel the pressure of change pushing you, okay? If you can feel that, if you can feel pain very quickly and feel that effort of, okay, I need to change what I'm doing, that's what you need to be doing, right? So it's not stick with this for 15, for 30 years and never change and just see how much pain you can take. It's those who are changing and adapting very quickly to conditions that the world are telling them or what the market's telling you. This thing is a mirror, right? So if you say, okay, I've got the blemish here, I've got a little dot on my head here, I've got to wash my face. The mirror is telling you exactly what you need to change about yourself and about your perception, or maybe about yourself or about the market in order to be profitable. So if it's telling you you're over trading, if it's telling you your stop's on a bad spot, if it's telling you this, this and that, take that advice. And it's obviously an effort to change and a willingness to change, and obviously an acceptance of what the market's telling you. But then once you're able to do that, it's a very useful skill to have, and it grows super quickly after that. Tuesday, Wednesday, yeah, I like that analysis. As long as you can look at every single loss and every single failure as one of those tried paths, right? It's just another path in the maze that you went and it didn't work. But now you learn something. Okay, that path doesn't work, or this effort doesn't work. It's the insane person that goes boom, 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 keeps knocking on the same door and no one's going to answer. You don't knock on the same door 50,000 times and expect something to change, right? That's what Einstein defined as insanity, doing the same thing over and over and over and expecting a different result. Yeah, Phoenix, I put it into the stream trades section. Frames, if you can link the thing in there. So should have, could have, what up? Maybe I put my stop below the gap. It is what it is. I think they were fine. Refination there was fine. Right below the order block. Maybe I could put it below here. So I'm not saying that instead of I'm going to miss out on profits here. I'm obviously going to miss out on profits, but how can I be better? Maybe just trim my stop to where I had it originally and keep it there underneath the inefficiency. Or maybe, yeah, maybe just leave it at break even right here and just let it go. And there's always something I can improve on. Like yesterday, right? I took that first trade and it was a simple mistake. Simple mistake. The fact that I just didn't wait for 1050 macro. Said it in the beginning of the stream. I'm looking for macros today. And then in the heat of the moment, I just simply forgot. I simply just took a trade at 1025 or something, got stopped out, still in the right direction, and then 1050 macro provides the entry there. And I said to study that and look at that and how time and price are lining up. So I make simple mistakes. I read it wrong. I place my stop in wrong positions. I'm obviously trying to improve. I think my entries are better than they used to be. And my exits are also much better than they used to be. I've got to sometimes hold it longer than I think. Sometimes I cut my take profit a little bit too early. Like yesterday, I said watch till noon. That being said, I'm not regretful of my decision at all to close it out there. So always things to improve on. Always things to learn. And if you keep that constant learning mind, then when you make mistakes and when you take a loss and things like that, it's just telling you, yo, work on this. Because if you learn from it, you build a better edge. Do you not? You just learn and build a better edge that you understand even more about the model. No, I think frames might have left. Let me link it for you. Give me a sec here. Right there, Phoenix, if you want it. So you've got the right in there. So nice little tree trace down. You've got a gap forming right here. I want you to study how this is being used. And you want to see speed, preferably as we close through this. Speed up through the reclaimed. This should be a reclaimed, future reclaimed bisi. So you're expecting this kind of movement, basically. Screenshot this, put it in the predictions chat. Second tape read, you want it? I can do it. Gonna re-enter or walk away sell. I'm satisfied with that trade. I'm satisfied, not even with the trade. I'm satisfied with my execution. That's the main thing, right? If we're always looking for satisfaction from outcomes, you'll never be satisfied. But satisfaction from doing get satisfaction from and growing. So I am very satisfied with that trade. I mean, I could look to re-enter and see if I can get more of that range. I do think it's going to be bullish. If anything, I would drop risk to maybe 2. So we'll see if we can get maybe another retap off this. But, you know, I don't think this is a huge indication that we're not flipping bias. I'm not going to flip bias and take a trade in the direction after. So we'll see. We'll stay on the 15-second here. So notice how that inefficiency there is being used. All right, this 1 minute gap. Wicked into, wicked into. On the 5 minute chart, what is we doing? I don't really have any discount PDRs in here other than I've got a bullish order block with the VI right here. And obviously the larger shaded gap. Look at the candle body as well on that gap I told you to look at. Holding that, coming down, touching consequent encroachment of the larger inefficiency. Candle body printing within here and shooting up. So now you will look for a secondary displacement to see if you can form a gap now on top of this reclaimed bisi. This is not an inversion fair value gap. Okay, this is not inversion. This is a reclaimed inefficiency. It still uses a bias and a balance loss side inefficiency. As you displace through it, you're looking for it to be reclaimed. Okay, now normally the delivery of price through it will indicate how we're going to be treating it as on the reclaimed leg up here. So as you go back and study the 15-second chart of how we're printing in here, if there's a gap being left and things like that, that'll still cause premium retracements. You can see there's an inefficiency in here with the wick, that's all inefficient. Running up into that, running back down into the short-term discount of that range. You'd like to see if this candle here can be the last on the defense. So this right here is your order block. Nice last on the defense. Candle buy staying within the inefficiency as well. 1 minute chart, you can see it again. Coming back and wicking and staying within and above this gap. I don't like the fact now it's coming back into this inefficiency though, not gonna lie. Should have printed up here, maybe rebalance down to that or to this and come back up. I'm like it's shooting all the way down. Inversion gap expected through this. Bounce price range, if you will. Now you don't have much. You don't have much past it. Besides up here. So really like all this, like I said, notice the fact there was no imbalances being formed on the way down, right? No imbalances. So all that. Is there any imbalances? Not seeing much. So that's very low resistance. Watch this price should stay within this inversion gap now. Now this section right in here, I'll mark this up black. So we need to see a candle body through. When you see a candle body through that, should indicate we're leaving the consolidation range. So now you can see we're coming back inside of it, staying within it. Obviously, you can rely on time too. There's no reason in that. So you could wait about 4 minutes, see if it leaves the consolidation in 4 minutes. If not, then you skip it and go to 1050. Just come all the way back down into the retracement leg. Invalidation, point of invalidation for reclaimed bisi civvies, the low end. What do you mean? Now this is almost being used as an inversion. Now I'll agree. This is now being used as an inversion gap. Notice how it's trading back into that, into the inefficient section, tapping it, and that's actually shooting back down. Now it actually looks like it's inversion, but we can't just look at PD rays to be our bias. So bias is still up here, I would expect. But I don't like the fact it's coming all the way back down. But if you look at this gap here, right? Buying, selling, buying, selling, buying, selling, buying, selling. Wicks, buying, selling, drops through that inefficient section with the wick. And there's a gap in here. So although it's been tagging it multiple times, so on lower time frames, you'll see that being filled in efficiently. On a specific time frame we're looking at, this is still what I deem inefficient, especially this sibi here. So that's going to be either used as an entry point or as an inversion. It's truly inefficient. And so not all gaps can be used as IFEGs. Not all gaps are inefficient, and do you expect them to be filled? that's a very important piece of information that in the beginning I wish I understood, because then you can actually make distinctions of what price is going to be doing. So it's not traded through this inefficiency, as well as overshot the gap a little bit here. I've marked out this order block to see if we want to touch this and go back up. If it comes back into this, I'm turning off the charts. Okay. What do we know about MXMs? We want to see breakaway gaps being left open. So the fact that we're even coming back into this, it's already kind of a deep retracement that I'm not liking. This order block is the last reference point in that displacement leg that we can touch. Did the candle stop printing? Oh, I think I just lagged out, didn't I? We're good. If you enter off it like a VI, where can we use the entire reclaimed? Oh, I see. I see. I would prefer if once it's displaced, it's tapped on the, if we're bullish, tapped on the upper end, get some reaction there on the upper 75, 50%, and then market long in there. I don't like getting in on the displacement leg, if that makes sense. I'm either getting in on the smart money reversal, the SysD, which sometimes is the displacement leg, but I'm not trading the right side of the curve in that point, or the retrace back into the SysD. So the displacement through the gap, most times I'm not going to be trading unless there's some sort of invalidation point to the left of that gap that it's referencing, or the gap itself is the inversion. But the displacement, like, if it's just shooting up, I'm not going to mark it in long because it's shooting up. There's some reference point to the left. Okay, so at this point in time, we want to see if the retracement is over. Okay, so we have about 10 minutes up until the macro starts. We want to see if we can get bisis forming prior to the macro so the macro can use them coming back in. All right, so this is the moment in time right here. We want to see if the retracement over question mark black. Okay, and this is what we will study. Go back to the 1 minute chart. We'll study this. Is that volume balance there for everyone? Or is it just my chart? Is that normal? I feel like that's not normal. I don't think that's normal. I think that's just weird on my chart. Yeah, okay. Why are you just messing with me, huh? That's weird. Why is it not on the continuous, but then they did this to me yesterday. Anyways, just don't even look at that. Yeah, when you go to the 15 or the 2, it's not going to be there. Yeah, see? I don't know why it does that. I'm having some issues with them lately. Or the 15. Who knows? What's up, Creed? Lack of bullish retracement SMT bother you? It shouldn't. I mean, we got it down here at 950. This low. Did we? I missed it a little bit. What's YM doing? Oh, YM got it. The 930 low. I don't know why it's taking the 930 low. That's not good. Solid day, weird week. I agree. I want Friday to expand. If we can get a nice clear into the new week opening gap and close above it, then Friday should expand. I want this as a consolidation reversal profile. Thursday low of week. Expansion back up. Yes, sir. So you can see in here, the 1040 retracement is now over. Unless we look to see if is that bias correct. Let's remove some of these PD arrays here. Clean up the charts. look at, go back to 15 actually. Look at the same thing over here. What I was talking about, this area and price. Tags it, tags it, tags it. That's what a true inefficiency looks like. Come back all the way into discount. Into the bullish order block. So still very high resistance environment. HRLR. Standard DV settings. Oh, I got you. Can I share a template? I don't think I can, right? Can I? No, I can't. What? Will you ever do a psych market stream debunking ICT logo? I could. I have my take on it, and then I also have data of kind of what it is. But we could. It's speculation, but if you've ever seen the actual doubling theory, then that's what it is, in my opinion. You got third observer. Yeah. No, the rabbit hole is not worth it. I'm not gonna lie. So we still think I still think the retracement's over after 1040. So we shouldn't take out that swing low there. That should be protected, especially if there's SMT at the bottom. We'll have to see. Okay, gap being filled there. See how consolidation ranges will form gaps? This is the most trippy part about trading consolidation, especially for ICT traders. There's gaps all the way, back and forth, back and forth, back and forth. So until we can displace out of that consolidation range high and low, then you look for it to really move. So look for it to trade and close above this black shaded area here, which is an inefficiency. Also, we didn't drop that hard from the 1 hour gap. Yeah, exactly. And did we even run out this that much? No, we didn't. So here's your 30 minutes of consolidation that we expected during Silver Bullet hour. It should be wrapping up now. But yeah, his logo is based on actually the doubling theory, not mine, but doubling theory by Jean-Pierre something. Very complicated yet understandable document and piece of work that he's dropped there. I don't really know how it relates to. I've tried to study it for hours on end. I couldn't crack anything from it. The document is very interesting to read, though, but it almost does not supply any sort of insights into what we're normally looking for. So that whole, the rabbit hole stuff is fun, but in terms of actually finding, I've almost come to the conclusion that we'll never find Enigma, right? Like, I think it's what we have right now is pretty close to it, at least in my eyes. Being able to time days from basically low entry to high is my enigma in a sense. Draw on time and things like that, I think is, what basically once I started figuring that out and using it, I don't think there's anything else I could really need in terms of the market and learning new stuff. That's why 2025 mentorship and 2024, I've not really been keeping track with it, except if it's PD array or tape reading related or time related, things that are gaps in my understanding. Off to work. Appreciate it. Yes, sir. Take care, my man. Hopefully we'll see you tomorrow. The illusory truth effect. It could be as well. It just could be as simple as it could simply just be the analogy of fractal, of like a fractal market, right? And that's all it could be. He said before that some sequence of whatever, and it could be something we've already figured out. Like time frame alignment itself is pretty powerful, right? The fact that you can use a 4-hour PD array and it counts for a weekly perspective. Sometimes we take for granted what we know. Can't personally believe there's a governing algo. You don't think so? If I showed you documents that there was, would you believe it then? It's not one governing album, but multiple. Probably not. Fair enough. Even if that, you can't believe multiple. Oh, I see. Oh, you can't. Oh, yeah. It's not one. It's multiple. There's about two that. Yeah, no, don't get shadowed again. I'm already shadow banned at this point. It doesn't even matter. There's two that are highly trackable. Creed. They're both called limit pegged, and time sliced. Two of them. From my understanding. So the time sliced and the limit pegged orders are the ones that are the highest footprint, but also the most precise in their delivery. Those are the ones that we typically will track, and be able to. Now there's about 3 other ones I want to say, and they're based on obviously the volume of it and kind of participation from the individual central banks. Yeah, that's all I'll say. But I don't think there's one algorithm, and nor do I think that ICT coded it. I think he coded his algorithm, his Enigma that follows and tracks it, but he did not code the price delivery algorithm. It's not uh, his own coding. He's made his language. I 100% believe he's made his language, which is what we read it, because what we read is not actually what the algorithm is doing. It's really close to it, but in order for him to be alive today, he's got to make it under signatures and techniques that he teaches it under, which if you read that doubling theory thing that we were just talking about, that also seems like it's talking about the market, but yet it doesn't at the same time. Like if you look at it from perspective that we look at it, it makes 100% sense. Someone else who doesn't look at it properly is going to be very confused of what it's doing. Here's 750 macro. So he doesn't get napped again. Yeah. Some of the stuff he says, no shade to him, of course, but you simply just got to not take it at face value. He does it to give himself credibility to new people, which 100% makes sense, right? If you say, okay, I coded the algorithm and then he's actually proving some good stuff, then that's a good starting point to believe what he's saying is true. But he kind of ruined his reputation, at least for me, after the 2024 shebang. Do you believe that order flow market orders move the market, passive sellers and buyers? No, not really. I think order flow is very hidden from us. Order flow is almost all spoofed. So DOM and things like that are all spoofed, where real orders and real things that are showing up, at least from my understanding, can't really be tracked like that. It can show you retail orders, which are good to an extent, but if the market's going to move somewhere, retail orders are going to do absolutely nothing to it. Okay. In order for price to print a specific level, there has to only be one contract available at that individual level. Okay. So if there's one contract available at that level, it'll print that price. It doesn't need 60,000 DOM orders for it to go up there. It just needs one. So that data point alone almost disproves DOM and its usefulness, at least to me. as well as the fact that time exists, how is it then that at specific time windows it does the same thing and offer the same movement? DOM's not going to do that for you. It may be a reflection of it, but it's not the thing that's moving the market. Yeah, exactly. Real orders are the dark pool. All right. The average order size is like 5 million or something like that, or 10 million. That you're not going to put that on the DOM. These guys do the Fedwire itself, right? They get people who run Federal Reserve, or not run it, but supply liquidity basically to central banks, the Fedwire. They did $4.3 trillion in March alone in terms of active transfers and active movement of market. So $4 trillion from one central bank in the month of March alone. They're not showing that on a DOM, you know? So it's crossing into this kind of deeper retracement area. During the macro time, I guess you could look for maybe total super opportunity, but to be completely honest, I'm not really interested in it anymore. Did what I was looking for, got me a little run up, boom, done for the day. Whatever happens, whatever happens. This week entirely has 100% been very weird. Very different from the rest of the days. And whenever you have a week like this, that's why it's useful to have, when you don't have that weekly perspective and you just have day and session, you then are not expecting to get this move. We're not expecting it to give us this entire move. I'll let it if it lets me, but we're just looking for maybe a daily or a session expansion range. So I've been scalping this entire week, as you've seen, looking for those little moves here to there, using time and price, of course, still. But can you share some of this extraneous material? I know it's a rabbit hole. Yeah, of course. I'll send you. We have a whole server. There's about 9 people in it, and we've got. I basically just shared every single Bank of International Settlements document I could find that was relevant. And there's some good screenshots in there. But if you want, here's this one. If you wanted to look, this is the one I was just referencing. This is a screenshot from the Fedwire page. This is public information, so you can't kill me. Nah. It's not conspiracy though, because it's. I'm not one to be a conspiracy just for conspiracy's sake, right? I look for the data. I'll find the data. That's what I'll believe. So here's a direct public document that says the average daily transfers in millions in March alone was about 4.7 trillion. I do indulge with rabbit holes. Yeah. I like them. So you want a document, take that document, run with it. There's plenty other more, but yeah, I'll send you the invite link, Maddie, if you want it. But anyways, to come back to price action here and focus back up. Overall, not a bad move here at 930, 950, still providing quality entries towards the draw and liquidity. In terms of bias that I had, rest of the session kind of meh. And as we drop further and further back into the range, I get for less and less inclined to take a second trade or even be interested in price action at all. So I'm definitely going to be sitting out the rest of the day, 100%. As it moves, we just let it. And as we flow into tomorrow, we'll see if there's any 10 a.m. news goodness. Then maybe we can scalp a continuation trade or something like that. But don't be surprised as well if PM session runs quickly on a day like today. Human nature is to fill gaps of knowledge. Exactly. Yep. I like learning. So anything I can learn that, even if it's not applicable, just to learn for learning's sake is fun to me. But yeah, I mean, there's a document right there that says in the month of March 2025, the average daily volume of transfers in millions of dollars was $4.7 trillion. Like, wow. Right. That's not showing up on a DOM. Of course, no problem. So take care today. I'll post this recording as usual up on YouTube. Did I post the one from yesterday? I think I did, right? What's today? Yeah, okay. So I'll post. I know I owe some people. I owe 1 or 2 people a review call or a call one-on-one. So I'll send that to you first, and then this will be uploaded. So, but I'll see you guys tomorrow. Have a great weekend. We'll probably run a back testing or Q&A stream sometime either later today or sometime between today and Monday. I'll let you guys know beforehand, of course. It'll be recorded, so as usual, don't feel like you missed out or anything like that. So Appreciate you guys sticking around, and hopefully the trades and ideas made sense and what we're looking for in terms of PD arrays. Day in, day out, same stuff, right? So take care, and I'll talk to you guys soon. Peace.